So Bitcoin dropped 40% from its all-time high, and apparently it's all Jane Street's fault, because obviously one market maker is responsible for crashing the entire crypto market. Facepalm. Look, I've seen a lot of FUD in my years in crypto, but this Jane Street conspiracy theory, it's giving the earth its flat energy. And I'm here to tell you why this narrative is absolutely, beautifully, hilariously wrong. Grab your popcorn, ladies and gentlemen. We're about to dismantle this thing piece by piece. As always, all sources are linked in the description below. Now, let's set the stage. Bitcoin hit 120k, then crashed down to around 70k. And suddenly, Twitter X is flooded with this theory. Quote, Jane Street is dumping Bitcoin through ETFs every morning, causing the price crash. It went viral. Like, really viral. Billions of views. People were genuinely scared. The narrative went something like, big bad market maker equals evil manipulator equals your portfolio is dead. Simple, emotional, and completely detached from reality. But here's the thing, experts actually looked into this. The block reported that analysts dismissed these claims. Shocker, right? Actual journalists doing actual research instead of retweeting conspiracy theories. So let's talk about why this FUD falls apart the moment you apply basic market mechanics. First of all, ETF flows are public information. Every single day, you can see exactly how much money went in or out of Bitcoin ETFs. If Jane Street was actually dumping billions, the data would show it. It's not some shadow operation. It's a public ledger. So when people say Jane Street is secretly dumping, they're literally making up a story that contradicts observable reality. Second, and this is crucial for those who don't understand how markets work, market makers like Jane Street provide liquidity. They don't dictate price direction. Their job is to facilitate trading, not to orchestrate dumps. If they were actually trying to manipulate Bitcoin's price, they'd be fighting against the entire global market. That's not how any of this works. Third point, the timing is hilarious. Bitcoin peaked in late 2025, then corrected. But Jane Street has been active in crypto markets for years. If they were the cause, why would Bitcoin moon to 120k first? The logic doesn't hold up. It's post-hoc reasoning at its finest. Something happened, therefore my theory must be true. Classic cognitive bias, folks. Fourth, and this is the one that hurts the most, Bitcoin's correction had clear macro drivers. Global uncertainty, Fed policy, risk-off sentiment across all asset classes. Blaming one market maker is like blaming one raindrop for a flood. It's performative ignorance dressed up as insight. And finally, who benefits from this narrative? The people spreading FUD, because scared investors sell, and when investors sell, certain actors can buy at discount. Sound familiar? This isn't truth-seeking. This is information warfare. So here's my question to you. When you see the next viral FUD story, are you going to panic sell, or are you going to check the data first? Because that's the difference between being a trader and being a pawn. The crypto market survives on emotion. That's its greatest weakness and its greatest opportunity. Don't let viral narratives become your exit strategy. Stay skeptical, stay curious, and for the love of God, fact check before you tweet. If this video helped you see through the noise, do me a favor, share it with that one friend who's currently spiraling over some Twitter FUD. We were all beginners once. Hit like, subscribe, and smash that notification bell. Because in a market full of noise, I'm bringing you signal. See you in the next one.